Welcome to PhillipCapital's Market Watch. I'm Jonathan Wu, Senior Research Analyst from Phillip Securities Research. And today we'll be taking a look at the performance of big tech and AI-related companies in May, and also draw some comparisons with the dot-com bubble of 2000. So diving into the performance of big tech in May, the collective group known as the FANG, comprising Meta, Apple, Amazon, Netflix, Google, and Microsoft, saw an increase of nearly 9% for the month, outperforming the Nasdaq's 8% gain, while the S&P 500 remained relatively unchanged. Amongst the FANG stocks, Netflix had the highest gains, rising by 20% due to optimistic news on its ad-supported service, while Apple, on the other hand, was at the tail end with a rise of only 4%. We can see that in recent months, the FANG has really started to significantly outperform the broader market, and we do think a big reason for this is the growing hype surrounding AI. So the growing buzz around AI is undeniably drawing investors into the tech sector. What's surprising is that even though big tech was up 10 to 20% in May, it actually underperformed within the tech industry, with large cap semiconductor stocks like Nvidia and AMD posting gains of over 30%. Small to mid cap AI related software companies emerged as the biggest winners, with many of these companies such as C3.ai and Palantir doubling in value over the course of the month. So just taking a step back, we wanted to see how the current enthusiasm for AI compares to the dot-com bubble in 2000. At the peak of the dot-com bubble in March of 2000, Cisco became the largest company in the world by market cap at roughly $500 billion and was trading at an astonishing PE valuation of 382 times. Using Cisco as a case study, we compared the unfolding situation with Nvidia, noting a few striking similarities. In the first scenario, we assume that the hype surrounding AI has peaked, in which case Nvidia's current PE of 184 times indicates that the hype right now surrounding AI is only around half of what it was back in 2000, with valuations expected to fall back to more normal levels over the next year or so. So in our second scenario, we assume that the AI hype is just in its infancy, with the expectation that price will peak in another year or so, as the narrative surrounding AI continues to gain traction. So in this instance, Nvidia's price action appears to be following a very similar trajectory to what Cisco was experiencing 1 to 2 years before its peak. If Nvidia follows the same trajectory as Cisco did, we could see price continuing to run up significantly in the next year, with its share price hitting close to $1,000 per share when full euphoria sets in. So although it's challenging to predict how the current AI hype will unfold, we hope that this brief case study has provided some insights through historical examples. And with that, I'd like to end off this segment of PhillipCapital's Market Watch. Do remember to follow us on social media handles, and subscribe to us on YouTube. Thanks for joining us and see you soon.